The RBA was always going to lift rates yesterday, but it did choose the highest end of economists' expectations, a 50 basis point rise, the single biggest rise in 20 years. But we do need to keep this in context. We are coming off emergency levels and rates are still at 0.85. That's less than 1%. Rates will go higher this year and probably into next year, and that will be no surprise. Since the last meeting, the board, though, is more worried about inflation. It is growing faster than expected. Joining me live now is our business reporter, Edward Boyd. Ed, a couple of months ago, we did think some of these inflationary pressures were transitory. No longer that is the case. They look entrenched at the moment.
They sure do, Laura. Look, a few months ago, the Reserve Bank was saying inflation was transitory. It was due to the pandemic. As we started to come out of the pandemic, they said inflation pressures would start to come down, but that hasn't happened. Inflation has continued to go up and up. And the RBA, the figure that they like to look at is inflation at 3.7%, which is underlying inflation. That's what it is right now. That's its highest level since 2009. And the Governor of the Reserve Bank, Philip Lowe, said yesterday he's expecting underlying inflation to peak later this year much higher than that, and then start to come down to that 2 to 3% level at some point next year. So he mentioned the word inflation 13 times in his statement yesterday, which is a lot. And it talked in detail about the cost of living pressures that lots of families across Australia are experiencing. And that's why he decided to lift interest rates by such a large margin yesterday, 50 basis points.
Right, OK, so it only matters when the banks move, and the banks are starting to move, Westpac being the first, Ed.
Yeah, look, I'm actually surprised the other banks haven't increased their interest rates yet for their mortgage customers. So Westpac did it last night at around 7 o'clock, and they straight away lifted their standard variable rate by 50 basis points in line with the Reserve Bank. But they also introduced a term deposit product at 2.25%. So perhaps the other banks have seen that term deposit and are now trying to come up with their own competition to that product. But for a homeowner with a mortgage of worth $500,000, 50 basis points is about $133 extra a month in repayments. For a $1 million loan, it's about $265 a month. And Laura, we know the cash rate's going higher. We got some predictions yesterday. If it's at 1.75% by the end of the year, for someone with a $500,000 loan, that's another $442 every single month in repayments. If it's $1 million, that's $885 extra every month spent on a home loan, on your mortgage. So it's a huge additional cost for Australian families.
I know you haven't quite had a chance to get across the market reaction, but what were you expecting at the open?
We're expecting the market to rise 0.5%, and I've just checked it. Prices are just coming through. It looks like the market's up 0.5% in early trade. Remember, the market was a bit surprised yesterday by the Reserve Bank's moves by increasing the cash rate by 0.5 percentage point. So the market fell 1.5% yesterday off the back of that decision from the RBA. It started to bounce back this morning in early trade, up 0.5% early on.
Oh, geez, you're good, Ed. Thanks so much. We'll check in soon. Now,
Thanks,
the energy.